Hey everybody, Abdullah Shamari here. Today we'll be going over Second Sight Medical Products Inc., or otherwise ticker symbol EYES. Let's do it. Let's make some money. If you aren't subscribed to my page, make sure to hit that subscribe button, crush the like button for the YouTube algorithm, and check out my Patreon link below. You'll get insights into my watch list, my portfolio, my daily readings, and instant posts on my buys and sells each and every day as they're happening. Second Sight Medical Products Inc. manufactures artificial hardware in order to help blind individuals be able to see again, whether that's color blindness or other types of blindness. Their hardware recently received FDA approval, Argus 2. Now they're in the process of working towards manufacturing the hardware and be able to then providers as well as patients so that they can then use the company's product. However, the company's also, as we can see here, they're in the process of combining with another company, Pixium Vision, and the joint company is then going to decide the direction of the company and when to start manufacturing the hardware, etc. I will say one of the things that I think is weak with regards to this company is the company's management. Currently, they're in flux. They're doing this business combination. We can see from their leadership team that currently the CEO is an acting CEO. The CEO has a tremendous amount of experience, but we can see that most of his background when looking into it is in the financial sector. He was a chief financial officer and has an accounting background. So he's not going to be able to take this vision of this company forward. It's going to have to be somebody else, and that's probably the reason why they've combined with Pixium Vision in order to be able to jointly produce this hardware and be able to solve this tremendous effort that they're doing in order to be able to help blind people see again or be able to partially see again versus their current state. Next, we'll want to go through the financials of the company. Again, this is my area of expertise. I'll leave the science to other YouTubers out there, such as Dr. Dean. Here, we're going to talk about the company's financials, whether they have enough runway to be able to bring their vision into fruition, whether they have enough cash, are they going to raise more capital, could we see a stock offering coming up because of the significant increase in the stock price, etc. So we'll go over some of these things. I personally have not invested in the company, so this is a third party opinion on the company's current status, what their financials look like, and what I think the prospects of the company are. So here we go. First, we'll talk about the company's significant run in stock price. We can see on Friday that they were at the beginning of the market, they were trading at about $2 a share. However, at a certain point, they were almost 5x, where they almost reached $10 a share, which is a significant growth in one day. And this was obviously catalyzed by the FDA approval of their hardware, the Argus 2. Next, we'll go into the financials. The company just received FDA approval. Obviously, the Argus 2, they were selling it previously. However, the revenues are pretty low. We can see here about $3 million in revenue in 2019, $6 million in 2018, and about $8 million in 2017. And they're obviously at a significant net income or net loss with regards to their financials. So they're losing money. They're trying to develop their product and come up with their product. As far as their balance sheet, it does look pretty healthy. They have about 16 million in total assets. When you click down into it, we get about 11 million in cash. The company's debt currently isn't significant. If we click into it, current liabilities, they have about $6-7 million in current liabilities, and their long-term debt here is only 2.3 million. So the company is doing well from a balance sheet perspective. Lastly, we're going into the cash flow to determine how much cash the company uses. We can see the company uses almost $27 million in cash every year in order to be able to sustain their operations. So this kind of tells us that the company needs more cash. They're going to raise cash. This significant increase in the stock price is going to probably in the next week or two show that they're going to do an offering where they're going to raise more cash so that they can build the manufacturing capability for their product, to be able to scale their product, etc., which are not bad things. However, we will see a dip in the stock price because they're going to do the offering at lower than what the current price of the company is trading at. So we'll probably see a stock dip. So if you have those gains in the stock, I would recommend selling off. And if you believe in the company and the technology in the future, you could potentially buy in again at a lower price. However, I don't think that the current stock price will sustain because they'll do an offering, etc. However, we have seen in the past where sometimes offerings happen and it jolts the company's stock price even more. Examples are Tandem Diabetes in the past that I've seen, where they were struggling, and because they were able to get an injection of cash, people believed in the company even more. And this could be the case for this company, that the FDA approval was a big hurdle that they needed to get through. And now that they've gotten through it, that they could potentially scale the business, and that additional cash and capital will help them to be able to get there. So that's my personal analysis of the company in its current state. We could definitely see that changing, just like as I mentioned, if they have offerings, etc., and we'll try to monitor this company. However, as of now, just summarizing what we had gone over, management is in flux right now. They're in a business combination. They only have an acting CEO. The company's financials are fine for now, but they're definitely going to need to raise more money in order to be able to scale their business and to be able to start manufacturing their product that received FDA approval. So overall, I believe the company's jolt in price was just hype for now. The people are excited about the FDA approval. It could very well mean they have a lot of potential, but we currently haven't seen that. And with a potential stock offering price coming up, I see that the stock price is going to go down because new investors are going to come in and they're going to come on at a price that they feel is reasonable. And I don't think the $10 a share that we saw on Friday being a reasonable price, and even the $6 a share almost that it ended the day at, is not reasonable. It's going to go down a little bit more than that, potentially in the $3 range I see, and then we'll see what other potential the company has as they scale their business. Those are my thoughts. Let me know what you think. As always, make money, enjoy life. Peace.